Hello, everyone, and welcome to the program. I am Bosun Omofaye. We're reaching you live from Channels International headquarters in Lagos, Nigeria. It's Thursday, the 11th of February. Let's get started. The season of earnings. Nigerian breweries reports 4.4 billion naira decline in net profit for the 2015 financial year. We'll talk about that later on the program. And of course, we're talking about the earnings from mining giant Rio Tinto, reporting annual net loss of $866 million, kept dividends flat as commodity prices plunge and a slowdown in the Chinese economy. Plus, French oil major Total reports 20% increase in annual net profit to $5.1 billion compared with $4.2 billion a year earlier. But let's start from the global markets. Asia in a mixed today. The New Year celebration still in China. Meanwhile, Hong Kong shares down almost 4% on the first trading day after the Lunar New Year holiday over global economic jitters. Reopening after a 3-day break, the benchmark index called the Hang Seng fell 4% in late morning trade, catching up with its global peers, with China-related stocks and banks being singled out for special punishment by investors. The China Enterprises Index fell 5%. That's the worst single-day performance since August 24, 2015, and was the top loser in Hong Kong, as some investors prefer to execute their bearish China calls through the more liquid Hong Kong market. Technology shares also took a beating today, mirroring its global counterparts, as investors were spooked by the fragility of the global economy and lenders' exposure to the commodities market. That's from Asia. Now look at the European market. Germany is the biggest economy in Europe. The main index, called the DAX, has stumbled some 16% since 2016 started, posting declines worse than France, the UK, and Switzerland, by as much as 7%. Investors in the German market are keeping an eye on some of its big companies, facing a number of issues, ranging from the automaker Volkswagen to the biggest lender Deutsche Bank. According to a Bloomberg report on Thursday, the shares of leading German automakers BMW, Volkswagen, and Daimler have fallen more than 23% in 2016 as demand for their brands weakened in China, one of Germany's biggest trade partner outside mainland Europe. Last year, the German market was an investor's favorite, but none of the 30 DAX shares has risen in 2016. Investors have been withdrawing money from the biggest funds tracking German shares this month, including $360 million from the iShares MSCI Germany ETF since August. So the market now, that index is set for the biggest outflows since August. But is the German market all about declines brought about by its big corporates? And that's what we're bringing in Olaf Krieger, DWTV financial correspondent for Channels Television, live from the Frankfurt Stock Exchange. Good afternoon to you, Olaf. Let's get started. A simple question. Is Deutsche Bank, Volkswagen, and others hurting the German DAX, and why?
Well, the answer is as simple as the question is yes, of course, because if the head of the Deutsche Bank, Germany's biggest lender, is making a statement like the Deutsche Bank is rock solid, so investors getting quite nervous because it's also a hint that something is wrong in Germany's biggest bank. And today it is another bad day for German blue chips, as you can see behind me. But it's not only Frankfurt, it's also Paris, it's the bourse in Spain, and even in Greece shares are heavily in negative territory again. So we are far from over all over Europe.
Yes, Olaf, but how much further impact will the corporates' news and earnings have on the Frankfurt market vis-a-vis not so encouraging economic data as well?
Yeah, it's a bad requirement for Friday's session, that much is for sure, which of course is another problem for traders and investors also. As long we have concerns like China, like the dramatic situation on the real material market, as long there will be no recovery, not at all, and no one knows, do we still reach the bottom line or not? And I think we need to have such a thing like a bottom line to rebound in shares, but right now there is no reliable hint for that.
So, put the entire European markets together for us, Olaf. Put them into some kind of focus and perspectives. Where are we at the moment? And I can see that behind you. Today's Thursday. Looks like a very brutal and brutish week. It's coming to an end in the next 24 hours. Talk us through this. Does it look like, well, this is how the week goes?
Well, as you already mentioned and pointed out, this is definitely another brutal day here in Frankfurt. And as I said earlier, not only in Frankfurt, all over Europe. And the banks, some banks are behind all this. I'll just give you another example. The huge French bank Societe Generale reported its net profit rose almost 50% to 4 billion euros in 2015 compared to earlier years. This is much more than many analysts are expected. But the trouble is the bank may not reach its profitability targets this year. So more bad news for the Frankfurt Stock Exchange, and I think we will see on Friday with heavy losses probably again. I think we're not out of the woods, definitely not.
Yes, Olaf, we thank you very much. And the corporate bad news is not peculiar to your market for a few seconds, and we're getting Nigeria's largest brewer. Nigeria Brewery is also reporting massive downsides to its full year 2015 numbers as well. So things look really, really nasty across the markets, perhaps. This is all, we blame it on China, we blame it on crude oil, and who else do we blame? Geopolitics, isn't it? Olaf, do have a great day. Let's put a smile to it. Olaf Krieger, DWTV financial correspondent for Channels Television, live from the Frankfurt Stock Exchange. We're back after the break. We're just stepping into the earnings from Nigeria's biggest brewers. Nigeria Breweries is bleeding. Guinness have bled. Let's see how much beer is left in the bottle. We'll be right back.